Well, hello, retail traders. This is the Sneaky Snake trading strategy, and I want to give some shout out to the beginner traders on what to look for. I have my own strategy, so I think it's always a good idea to learn to create your own strategy. Not follow people blindly, but create something that works for you. Paper trade for a long time, back test your strategies, come up with some kind of strategy. And the best way that I found to find my strategy was going through YouTube, looking for experienced traders and developing one that way. Then I joined a few chat rooms and I got on StockTwits and Twitter and just got a good, strong community going. Second is to, when you create a strategy, make sure that you're doing your own work. Don't find people blindly. Don't follow people blindly. Come up with something that works for you. We all trade different. So my strategy is based on chart patterns, moving averages, and being in the now. And I'm going to kind of walk through my strategy and just talk about it a little bit. It might help you in a way to get started on trading. I like to buy at support and sell at resistance. I like to keep a good watch list going, a good follow. I like to keep that watch list clean. There's different kinds of watch lists for different kind of things. What I mean by watch list, it's a list of stocks that you want to follow that have been good to you and you want to keep following them. You want to use them over and over and over again. Stocks that have done well for you. Stocks with a lot of momentum. Stocks that get talked about, and stocks that have a lot of money. Stocks with a lot of momentum means a lot of volume and a lot of talking about. They're in the news all the time, so they're going to be getting a lot of momentum. That's how I trade. I like to look for stocks that have a lot of good volume and have a lot of good momentum that pull back a little bit after a good run, and then repeat, rinse and repeat, rinse and repeat, so and so for so many days. So my strategy is based on chart patterns, moving averages, and being in the now. What I mean by chart patterns, this is Sneaky Snake trading strategy. We're a breakout, pull back, boom, trend trader, buy at support, and sell at resistance. So I'm talking about my strategy is a snake, breakout. You got your chart pattern right here created. So you have your snake. It breaks out of that channel. Let's draw that channel in right now. And this is a strategy that I've worked on for many years and just put it together for the past 3. So you have a little trend sell-off. It breaks out of that channel, creates a flag. We've created 2 flags here, a head and shoulders and a little symmetrical flag here on the daily. And then we went ahead and broke out. We held the 9 all the way up to the end. Exit to trade once it breaks out of that 9. So that's my moving averages. This is the pattern. It's called a long trend, downward trend, a bear flag. Breaks out into a bull, which is an inverse head and shoulders. Then a symmetrical flag. The 9 crosses the 21. Both the 9 and the 21 cross the 50. And boom, and we bounce off the 200 SMA. I mean, that's not like it is all the time. There's different patterns. It might not always bounce off the 200. It just might come out of the trend, create a flag, and then go ahead and break out to the upside. But that's my basic strategy that I trade when I'm trading stocks. And I can do it in any time period. If I wanted to swing trade, of course, I'll be using it in the daily. If I want to scalp, I'll be using it in the 5-minute and the 1-minute. So let's go ahead and get to the next part of it's looking for the patterns. Once we break out of that snake, we want to look for a pattern. And I've got different kind of patterns. You have your leg coming down, you have your inverse head and shoulders. You have it coming out of the flag, comes up, and you have a head and shoulders, which is bearish once it breaks out. You have a falling wedge. Comes out of the snake, creates a falling wedge, and breaks out. Then you have the rising wedge, which is a bear flag. You have coming out of the snake, you can play it inside the channel, And then once it breaks out of the channel, you want to get out of the stock. You have a bull flag. Breaks out of the snake, comes out, creates a bull flag, and then moves on up. You have a bearish flag. Comes out of the snake, starts to create a bearish flag, which is the opposite of this. And you can play it a couple times once you break out of that flag, but make sure to get out when it starts to pull back. You have a symmetrical triangle. You got the snake, breaks out, creates a symmetrical triangle, and then boom. You have a symmetrical triangle to the downside. Breaks out, creates that symmetrical triangle, and then goes down. So these are, you can tell these when you get to look at them and how to trade them by the volume. The buyers are coming in, what kind of candles is coming down at the bottom of the flag. Is it going to be a bullish, or is it going to break that flag and go to a downtrend? You have the ascending triangle. You have the descending triangle. Sometimes this descending triangle can fool you sometimes. It'll start to squeeze and be a fake out and go to the upside. You have a double bottom. You also have the triple bottom. And then you have the double top. Exit idea is when once you take the trade and it comes up, pulls back a little bit, then you see that double top, you might want to get out of the trade because that's a bearish sign. You can copy and paste these anytime you like. This chart pattern's cheat sheet. Now, I know every one of these patterns, and I know how to trade them. So once you study them, once they break out of that snake and you see that little pattern, that's what you're looking for, and that'll tell you which way to take the trade. See, even here, you got a falling wedge. It almost looks like a descending candle, but the lower lows come in and the lower highs come in. It squeezes at the end, and then you have the breakout. So a lot of times you don't take this trade until it breaks out of that flag. Same as the double bottom. You got to look at them candles at the very end and see what they're producing, what they look like. You got to look for them chart patterns. I talk about the spinning top, breakout. You got the three black crows, which is an indicator that maybe you'll get in some kind of flag here that'll tell you that we're going to the upside. Then the exit idea would be the top of that there candle. Same thing here. You got three white soldiers. You want to keep an eye on that candle, see what it tells you. You know, it could tell you that we could be pulling back just for a consolidated period and then have a new breakout. Three white soldiers is a bullish sign of a trade. So I'm always looking for candlestick patterns. Reversal patterns. You have the dojis. You have 4 different kind of dojis. You have the dragonfly. You also have the gravestone. Then you have the tweezer bottoms. So each one of these are an indicator on when you're breaking out of that snake or that squeeze out of that pattern. You know exactly what you're looking at, or even at a top of a reversal, what to look at when you're at the very top and you start noticing these upper shadows on these bodies of these candles, like right in here. Could be a negative sign that this thing might be pulling back. So I study the candlesticks. I look for the reversals after paper trading or just practicing. If I see what pulled this stock back, and I want to look at them candles at the very top and see what candles they are and memorize them, and then recognize them when that happens again. And when it happens again and happens again, you start to get sold on the idea. So the moving averages. I use different moving averages. A lot of people will use the 9 or the 8 EMA. They'll use the 13 EMAs, and AMAs are 2 different kind of averages. You need to study that. I use both EMAs and SMAs in my strategy. Like I used the 9 and the 21. We'll go back to my chart here. We got the 9 crossing the 21, which crosses the 50, and we bounce off the 200. Now I use the 200 as a pivot point when I'm charting up. It could be a solid support, or it could be a resistance to break. I'm going to take it to the 200 and get out of the trade. Or I'm going to wait for it to pull back and hit the 200, look for the pattern, and then take the trade. Look at them candlesticks when it starts to reverse. That'll be a good hint. Same as up here. Keep a good eye on them candlesticks. right here. You got a long-legged doji. Some could call that a shooting star. And it moves ahead and it breaks out to the upside. You bounced off the 9. Let's say you saw it break out and you want to take this trade. Wait for that thing to pull back to the 9 and then bounce on up. Pull back to the 9, break on up. So the 9 EMA crosses the 21 SMA is a buy signal to me. And I'll get ready to take that trade. And it bounced right off the shoulder line of this inverse head and shoulders. This is your left shoulder. This is your right shoulder. So once we created that head and shoulders, that was also a buy signal. And I trade these a lot. I have a lot of different kind of strategies. I just wanted to bring you mine and tell you not to ever follow anybody blindly. Take their alerts. Wait for your opportunity to get in the trade. Build you a strategy that works. If you like to trade the 52-week highs only, then that's fine. If you like to trade chart patterns, that's fine. If you like to trade moving averages or the CCI or the RSI or the VWAP, that's all fine. That's all included in this strategy when I'm in a trade. I want to keep that VWAP running. I have different kinds of strategies that I use. I have the ready, set, go that gives me an indicator to take the trade. For example, this happened right at 254. Right at 254. Let me see the time up here. Ain't it on there? Huh, it's not on there. That's funny. Oh, I know why. That's why. So right about 254, well, that ain't too much of a trade right there at the end of the day. So we had ready, set, go right here, right about 10:52. Right in here, we had a little strategy going on for the breakout. We had a double bottom. We have what you call a wedge. Just like that. So it breaks down, breaks out, starts to create your wedge, and you realize, okay, I got touches here, touches here, touches here. We come down, and then all of a sudden we break out of this wedge, and then there's your run all the way up to the top. And that comes from this ready, set, go. So I created a pattern, saw a pattern there, but that's just one strategy that I use. And when I'm using this in here, let's put in the SPY. And it gives me an alarm when it's ready to be looked at. So on the SPY, I use the VWAP. I got the VWAP strategy along with this here ready, set, go. And that's why I usually trade these two together. We had a double bottom right here at open. A little snake, break out of that channel, pulls back to a double bottom higher low. Snake, let me draw that in for you. Draw this little pattern right here. So I got the snake. It breaks out of the channel. You don't take the trade yet, then it pulls back, creates a higher low. We break out again, and then we retest this here trend line 2 times, and then boom, to the upside. So this created what you would call a symmetrical flag. Right at open, you can see the flag. This is the 1 minute time frame. So I'm always looking for a flag when I break out of these here channels. Just like that. You got the snake, break out, pull back, higher low, creates a symmetrical flag, And then you're able to, once it breaks out of that flag, it pulls back to the top of the resistance level in this here symmetrical triangle, and you go up to the upside. Then you go ahead and you bail out on a double top, and then it comes back again, hits that trend line, holds up pretty well, creates another head and shoulders right here, and it breaks out again. So you're able to look for them patterns. That's what I do. And this, I could be looking at my other chart. So that's my strategy. I build chart patterns, moving averages, and being in the now. And you notice a lot of good traders use them chart patterns. I can name a lot of good examples, but I don't think I'm free to do that right now. And that's it. Sneaky snake trading strategy. Let's go over it just a little bit right here, kind of get you what I'm talking about. Sneaky snake trading strategy. Sneaky snake, where we break out, have the pullback, and then the boom. I'm a trend trader. I like to follow the trend. I like to buy at support and sell at resistance. I use chart patterns, moving averages, and being in the now. And by now, you've got to keep up on your strategy. You got to keep up to date, and you got to keep it going. You also want to create a good watch list. This is going to be my watch list for this week. I'm going to have it linked to my charts. This is going to be earnings for this coming week. So I've got it volume high, and I'm going to watch this all week long. In case some of these stocks want to just go ahead and have a short knife, it could be a buying opportunity. We do have a couple in here that are on sale right now, like Boeing. We've got Tesla. Both of them are on sale right now. Boeing had the bad news, but it started to break out to the upside. I called that out yesterday. We have Netflix on here. We're definitely at an all-time high, but I got my pattern. I got it all set up. We got General Electric. This one here I'll be looking at. Everything's at an all-time high. Everything's looking real good. I'm a little nervous. We had this nice run here, called this out, this inverse head and shoulders on IBM. Now we've got another head and shoulders. Maybe earnings come out. They'd be great, but still sell into the news. Catch it off the 21. Create a little head and shoulders right here. Maybe it wants to pull back. Well, we had a good breakout right there. Oh my gosh. This thing just might want to pull back to the top of this here support level. What was previous a resistance now can become a support. But yeah, there's a lot of good things going on with AI. So you want to be in the now. Create a good watch list. Talked about that earlier. Stocks that you want to trade, to follow. I have all kinds of little watch lists. I have hundreds of watch lists. This in here is a sneaky snake scan that I got. It pulls up top runners like AMD, Tesla, Apple, Nvidia, Amazon, Baba, Google. All these are good stocks. Oil's in here. I got ARC. I got Boeing. I got Oxy. So they're all good running momentum stocks, and I'm always watching them. Now I got a Bitcoin ETF that I follow. They started to turn around yesterday. Keep them in mind. In fact, I think I got a new one to add here, but I'll get to it in a second. It's 2 times earnings on it. So I always start there. Listen to CNBC. Listen to Schwab radio station. On Ameritrade. I got another thing you might want to get you a good platform. I use TrendSpider. I use for charting. I use Ameritrade for charting and trading, and I use Tastyworks. So I've always had an extra platform to trade on, just in case one wasn't running right. I can get to the other one. When I first started trading, I had Scottrade and Ameritrade, and they merged. But I had to have it because I was trading penny stocks. Ameritrade wouldn't allow some of them penny stocks on their platform, or vice versa. Scottrade wouldn't allow some of them penny stocks on their platform, and I was able to trade them by switching back and forth to platforms. So don't follow people blindly. Take people's advice, take their alerts, but do it on your own reconnaissance. Make sure that you understand why you're in that trade. Make sure you know when to exit. You got to have some kind of strategy. I trade stocks that have a lot of cash. It'll change. your environmental change. We got, Brandon in office right now, and he printed $6 trillion for Wall Street, and they're loving the heck out of it. Then you had the Fed getting in the way, which caused people to short a lot of stocks. Then we had that beautiful V recovery. And this momentum, now that the Fed is now that the Fed's talking about lowering interest rates, that excites the market. And they've already priced it in, and they're building upon that momentum. We broke an all-time high Friday. I told the room it was going to happen after earnings. During earnings, people were going to make up their mind. They did. The earnings kind of sucked on the banks, but they're still doing very well with AI. So AI is the momentum of this market right now. You want to follow stocks that are AI tech related. NVIDIA, AMD, Microsoft, Apple. I can go down the list. TSM, was it CM? Oh, I can't remember that other one we just traded the other day. But yeah, you want to keep a good eye on tech right now. So being in the now, I know them are the ones that are going to get the most momentum. Learn the chart patterns. After you break out of that snake, chart patterns, if you want to be a chart pattern trader. If you want to get the squeeze, get in early before they break out. They always have a squeeze spot. Every one of these have a squeeze, have a triggered place to get out, to get into the trade. Triple bottom, starts to move up, breaks that, boom. Learn them candlesticks. That's my strategy. I want to learn how them candlesticks work. I want to make sure that I'm getting in the right trade and recognize what a breakout is. 3 black crows to the downside. I love that pattern. It's a bearish pattern, but it could cause a nice bearish reversal, bullish reversal. Here's 3 to the upside. Evening star. You've got the dojis. You've got the Hermione right there, bearish and bullish. Dark cloud cover. You got the tweezers, tweezer bottoms, tweezer tops. No one to exit a trade. You can tell the difference when your candles come in and you start seeing a little different looking candle. 2 or 3 of them coming up in a row. That might be a good idea for a reversal to the upside or to the downside. The next one, you want to keep an eye on them moving. Well, mine, like I said, I use the moving averages. Some people will use the 50 SMA and the 200 SMA. Look for a golden cross, or look for the bounce off the 200 on the daily. Or say, well, we pulled back to the 200 SMA on the daily, and the 50, maybe the 21 if it's a short little pullback, 21 SMA, 21 EMA. Find the moving averages that work best for you. I use the 200, I use the 50, I use the 51 EMA, I use the 21 SMA, I use the 9 EMA, I use the 100 sometimes. I use the 65 EMA sometimes, the 100 SMA. So yeah, I find them to be good, useful instruments as buying support and selling at the resistance. Say if the 9 crosses the 21, runs up and hits the 200, I'm going to go ahead and get out of that trade. And then maybe it'll break it a little bit later, but it seems like it always finds a little resistance once it hits that 200. If I had something to do and I see it hit, I'm going to get out of it, let it pull back maybe, and jump back in it. So that's about it. I just wanted to bring you this strategy. Tell you the purpose of this video is not to follow anybody blindly. Create your own strategy. Build in a community. Learn what people are doing. When they call out a trade, don't just go in it blindly. Go in it because, oh, well, I see it now. I see it breaking out of this pattern. I see it squeezing. I see it bouncing off the 200, or I see it bouncing off of a moving average. Or I see it breaking a triple top, and I think it's going to run up higher because it's got great news, kind of like what happened to NVIDIA. Let me pull up NVIDIA. And see, with my experience, I know when to get in and when to get out of a trade, or when to think it's going to break. And it was weird how I called out NVIDIA. You know, that when NVIDIA broke to the high right here, they were calling this thing to go to 650 to to 1,200 to 1,100 bucks, especially after this second earnings report. And then you had a big gap. So I knew in my heart that this thing had to consolidate. And this thing was in the news every day with AI selling these big high price computer components. And I was listening to people say, we're going to break the 500 and we're going, I mean, you get these huge upgrades, 650 during this here period of time. And with experience, I'm saying no, because we need to consolidate. And we've already had the big run. We've already done it. So my reasoning for calling this trade out is we formed what you could call an ascending triangle. And we had a 1, 2, 3 triple top. And that happened right at the end of the year, the last day of the year. And I said, we're going to break out. You watch. Coming this week. I sent a message to Jim Cramer. I said, it's your time now. You're going to get your 650. And, he was hassled a lot because, he said this was a good trade. Nobody was believing it. And every time it pulled back, they'd give him a little hard time. He said, I'm sticking with it. I'm sticking with it. And it, kept pulling back to that 400 area and then bouncing off that 400. And I was trading this to the top. And then we formed that triangle. And I said, you got it now, buddy. And we just started breaking out at the first of the year. As the market pulled back, this thing was breaking out. With experience, I knew that. I knew we had to consolidate after this big bounce here right after earnings. That's when they decided they're going to put their big money in this stock and take it with the AI trade. So build your own strategy. Don't follow blindly. Get into a good community. Understand how people trade. Stay away from the bad traders that pump stocks and stay the ones that are educating and teaching you how to trade. Those are the best kind. Someone that just calls out a stock with no chart, no fundamentals, or no reasoning behind their alert, be a little leery of them. Someone that posts a chart, tells you what he's looking at, why the stock might move. That's when you want to teach yourself how to trade. Don't go in blindly. That's the main reason for this video. And I wish everybody a great day learning how to trade. Follow good traders and always be happy and merry. And I wish you all a great day. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now.